Hi, Barbara Friedberg here to talk to you about two of my favorite investment platforms, Wealthfront and M1 Finance. You're going to learn a deep dive into each of them, the pros, the cons, and which will be best for your investing. They're both great if you're interested in having some help picking and choosing investments for you. Let's hit the similarities and differences first. Similarities. Both platforms offer self-directed stock and ETF buying and selling. So if you want just a portfolio of stocks and ETFs, you can do that on both platforms. They both will rebalance your investment portfolios. That means you have an asset allocation that you want to stick to, a mix of stocks and bonds, and both platforms will buy and sell securities in order to stay consistent with your asset allocation preferences. Now, Wealthfront's rebalancing is automatic, and M1 is user initiated. They both offer high yield cash accounts, so you can get greater return on the money that is not invested in the markets. And both offer margin lending. But M1 only requires $2,000 to borrow from your account, while Wealthfront does require $25,000. Let's dig into the differences before we drill down into each of the platforms and find out what they're about. Wealthfront is one of the oldest robo-advisors or automated investing platforms. You take a quick quiz that covers your age, your financial goals, your risk tolerance. From the results of that quiz, you get a pre-made investment portfolio, stocks and bonds, according to what you have input on the quiz. Now, you can take the quiz as many times as you want. You can change the portfolio whenever you want. In fact, at Wealthfront, you could even add stocks to that investment portfolio. Now, M1 also offers expert pre-made model portfolios, but it is not a robo-advisor. You choose from a variety of different types of investment portfolios, and we'll take a look at those later on in the video. So stay with us till the end, please. You choose the portfolio you want, and in terms of rebalancing, you have to tell the platform, click a button and initiate rebalancing. So M1 is a stock and ETF investment platform first. You can buy individual stocks and ETFs and invest in them in your preferred asset allocation. You can add model portfolios to that, and M1 will rebalance for you. Wealthfront is a robo-advisor first. Now, it doesn't mean you have to use their robo-advisor, but that is what they're known for. And their robo-advisory portfolios are well diversified. They come in different varieties. You can get a socially responsible, you can get just a stock and bond, U.S. and international portfolio, and it is known for its robo-advisor. Their fee structures also differ. And again, don't click off. We're going to get into that as well. Here's the simple breakdown of the comparison between Wealthfront and M1 Finance. Core focus is different. Wealthfront is really a robo-advisor with optional DIY features, self-directed stocks and ETFs that you can purchase. M1 Finance is a self-directed investment portfolio first, with screening and options for research into which stocks and ETFs you would like to buy. They do offer pre-made model portfolios and rebalancing. Here's where the fee structure that I promised you comes in. For your robo-advisory portfolio, with Wealthfront, you'll pay 0.25% of the value of the investments that are invested with the robo-advisor. There is no management fee if you have a separate stock and ETF portfolio. Now, M1 Finance is commission-free if you have a $10,000 balance or a loan with the company. Otherwise, you'll pony up a low $3 a month fee. So who best fits at each of these platforms? Wealthfront is great for passive investors. They just want a portfolio setup that's going to work for them. But if you want to tweak it a little, hey, Wealthfront enables that as well. Wealthfront is also good if you want tax loss harvesting features. Wealthfront offers that, M1 doesn't. M1 is ideal for self-directed investors, not traders, but investors who want to buy and sell stocks and ETFs. And they want someone else to rebalance it. It's also ideal if you want to throw in a pre-made model portfolio as well. Okay, here we're going to do the deep dive. You're going to walk away and you're going to know everything you need to know about each of these platforms in order to make the best decision for yourself. M1 Finance has a wide choice of stocks and ETFs. There are thousands, so you can diversify and choose your own strategy. But they also, and they also offer expert curated model portfolios. And we'll see an example of those coming up. So remember, stick with me till the end. And these support various financial goals, such as retirement or socially responsible investing. The rebalancing feature at M1, which means the assets will be bought and or sold to go back to your preferred asset mix, is on demand. It's not automatic. You just click a button and say, I want my portfolio rebalanced. And as an aside, I do have an M1 Finance account, so I do use this platform. Here's a picture, just as I promised, of some of the M1 model portfolios. Now, within each general category, you're going to have about 6 different options that are going to range in their asset mix from very conservative to very aggressive. And the differences in these specific portfolios will not only be in the type of investments, as well as the percentages of stocks versus bonds. The aggressive portfolios will own more stocks. The conservative will own more bond ETFs. General investing is a portfolio mix of stocks and bond ETFs. And you just choose your risk tolerance and you're ready to go. I happen to have this in a moderately aggressive portfolio in my own account. Now, those of you that are familiar with target date funds, and I do have a video and article about target date funds, these portfolio choices, the retirement, are like those. Responsible investing, well, they incorporate socially responsible funds. Income earners, I have one of these portfolios too. It includes, the one I chose is globally diversified. So it has a mix of US and international high dividend stocks. Then this is just stocks and bonds. Very simple. Don't want to invest in anything else. And they go from, of course, aggressive to conservative, like I said. Now, here's where you get a little fancy. Now you can get a tech portfolio here. You can get some hedge fund lookalikes. So I encourage you to take a look at the M1 model portfolios. If you just want someone to set up a portfolio for you in the risk tolerance that you're comfortable with. There's no quizzes here. You make the decision. And then this is a picture of the M1 stock screener. It's a pretty simple screener. They do have an ETF screener, but they are coming out very soon with more in-depth screening capabilities and research and analysis. So stay tuned to learn more. Follow me, actually. Go to my blog, Barbara Friedberg Personal Finance. Stick with my YouTube channel, subscribe, and you'll learn about the additional features when they do come out. But screening, as you can see, market cap, PE ratio, dividend yield, and sector. And you can screen like that. They have about 3,600 stocks, which is probably enough for most of us. Okay, so here are the other features in M1 Finance before we flip over into Wealthfront, their fees, and then get to the end, in which you will get a nice wrap up with some advice on how to select which platform is best for you. We discussed the fees, no commissions if you have 10,000 balance or a personal loan, $3 per month otherwise. Customized portfolios, you can create your own portfolio. They do offer banking and cash account, high yield, and the rate will vary based on market interest rates. We all know how that works. When interest rates go up, the cash account will pay higher yields. When they go down, they'll be lower. You can access borrowing with just a $2,000 balance. So that's pretty cool too. Okay, got to take a breath here. Okay, let's get into Wealthfront. Wealthfront started like 10 years ago. I'm sorry, 15 years ago. And they're one of the original robo-advisors. They also have a really cool questionnaire it's called the Path, and it attempts to be a digital stand-in for an actual financial advisor. And I've used it, and it's really great if you want a little more direction. But beyond that, you get a very good automated investing experience. Take the quiz, as I said, and you get presented with a whole variety of different portfolios, great diversification, and you can tweak your risk level or choose a different type of portfolio according to your values and a socially responsible. You can also actually invest in Wealthfront in a college account too. Then this is where Wealthfront differs from M1 significantly. They automatically keep your portfolio rebalanced in accord with your desired asset allocation. And they offer tax loss harvesting, which Wealthfront claims will help to increase your returns. I'm not saying that's true. It isn't true. I'm saying Wealthfront does suggest that. Cost-effective fee is just 0.25% of your invested assets in the robo-advisor. Otherwise, if you invest in individual stocks and ETFs without the robo-advisor, fee-free. If you've got a little more money, they do offer direct indexing, which can, according to Wealthfront, optimize your returns and minimize those pesky income taxes. You can choose from a socially responsible portfolio, individual stocks, ETFs, and themed portfolios for tailored strategies. We're going to see those next, so do not click off. And you can also get bond ladders for you fixed income investors, high yield cash account with savings and checking features, and a portfolio line of credit. You do need 25K in order to access that. What is this? Okay, this is a picture of what your asset allocation will be. If you took the quiz, you have a risk score of 8.0 out of 10. That's pretty risky. Now you see here this little slider. If you want a less risky portfolio, you can just slide it down and you'll get a different mix or percentages of US and foreign stocks, emerging market stocks, dividend stocks, corporate bonds, and TIPS, which are treasury protected securities. Now you can see here you've only got 12% of corporate bonds and 6% of TIPS. So that's a low percentage to fixed income and a higher percentage to riskier, more volatile stocks. And that's what you would expect in a more aggressive portfolio. They do offer many different portfolio options, and the software really does it all. And like I said, you can change your portfolio whenever you want. Now, let's say you want to do a little self-directed investing with Wealthfront. This is a newer feature, and you can buy and sell individual stocks and ETFs, like I mentioned before, but they also offer something called stock collections, and they're like themed portfolios, and they've made them up all for you. So you can just choose to invest in one, and you get, for example, wide moat. That means stocks that have a competitive advantage, and there are 11 stocks in that portfolio. You can get the top semiconductor stocks, software tech, dividend blue chips, cloud computing, etc. So this is kind of cool for the mix of self-directed investors, but those who want a little bit of guidance on the side. So here we are. We've made it to almost the end. How do you decide? Choose Wealthfront if you want a fully managed robo-advisor with tax-efficient portfolios. You don't have to do the heavy lifting. They will keep your portfolio aligned to your financial goals and your risk tolerance level. And if you want to customize it, you can do that. That's who Wealthfront is great for. Now, if you don't want that much help and you're really more of a self-directed investor and you want to choose your stocks and your ETFs, you want to build your own portfolio and maybe choose a model portfolio, maybe not, but have someone to do the rebalancing for you, because I can attest, I do have an account with M1 Finance and it's great, but most of my assets are outside of M1 Finance in a self-directed brokerage account, and the rebalancing is a big job. So this is a very nice feature. Finally, Wealthfront is great if you are a passive investor who wants everything managed, while M1 suits do-it-yourself investors who want some control with some automation. Both have cash management and socially responsible investing options. So feel free to take a look at the accompanying article. Links will be provided below. And if you like this video, please give me a thumbs up, like, subscribe, comment. I love to interact with you. And so please leave your comments below. I respond to every one of them. And feel free to pick up a copy of one of my free downloadable offers that will teach you more about investing. Thanks so much for stopping by. And if you do click on one of the links marked affiliate below, our company might get a small commission, which will help us fund this channel. See you next time. Bye.